Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EUR-USD currency pair forecast. Let's have a look.
The euro closed Monday up by 12 pips. This morning, the single currency continued to rise, which shows that it intends to reach the upper boundary of the price channel, 1.0873. Until the price consolidates above this level, the price will continue to fluctuate within the sideways range before, as we expect, it falls towards a strong support level, 1.0796. The Marlin oscillator barely reacted to yesterday's rise. Today, the US Treasury is auctioning bills and bonds totaling 345 billion USD, with an auction for 2-year and 7-year notes totaling 72 billion scheduled for tomorrow. Typically, such significant volumes are sold with a strong stable dollar to maintain investor interest. In turn, investors buy dollars by purchase bonds. The second estimate of GDP numbers for Q1 will be released on Thursday. Against this backdrop, the euro has little room for growth unless Europe suddenly announces surprising news. But if it does, the initial target will be the level of 1.0905. On the 4-hour chart, the euro is testing the MACD indicator line, the blue line on the graphic, which has closely approached the target level of 1.0873. The Marlin oscillator is optimistic, but we can only see signs of growth when the price consolidates above 1.0873. A break below yesterday's low at 1.0841 will serve as a signal that the price will fall. However, we also consider the possibility that the price could move sideways until the end of the week.
And now it's time for GBPUSD. Let's discuss it with Paolo Greco.
GBPUSD continued its upward movement on Monday. Despite the absence of any significant meaningful news or reports, the British pound kept rising. There's really nothing more to say. Even those traders who didn't believe in the logic of pound's rise could see it for themselves on Friday or Monday. Whatever happens in this market, only the pound rises. Volatility was low, which didn't hinder the new rise. Since the current movement is entirely illogical, discussing its prospects doesn't make much sense. On the 1-hour chart, GBPUSD continues its upward trend, which serves as a correction. The market shows that it is willing to buy the pound regardless of the fundamental and macroeconomic background, or even the lack thereof. Therefore, it is futile to analyze any patterns. Even breaking the current trend line will not necessarily mean that the downtrend will start. The price breached this line on Friday, and nothing significant followed. On Tuesday, there are no significant events scheduled in the UK or the US. This is unlikely to affect the pair's movement, as it continues to trade sluggishly and mostly shows growth regardless of fundamental and macroeconomics. Therefore, it's unlikely that anything will drastically change today. Volatility will likely remain low, and any corrections are expected to be minimal.
What about silver commodity asset? Area of Markmore has a trading plan.
If we look at the 4-hour chart, it appears that the 50 EMA is still above the 200 EMA, where the golden cross intersection confirms that buyers are still dominant. Although there is potential for weakening correction, which is indicated by the condition of the stochastic oscillator indicator, which is already at the overbought and middle level, is preparing to fall below the 80 level, where, if this happens, then the silver commodity asset has the potential to weaken down to the level 30.77. But as long as this weakening correction does not broken below the level of 30.18, then silver still has the potential to strengthening again to the level of 31.80. And if this level is successfully broken above, silver has the opportunity to continue its strengthening up to the level of 32.19 as the main target, and if the momentum and volatility support it, the level area of 32.69 as the second target, and 33.28 as the third target.
That's all for today. See you soon.